Hello, hello. Hope everyone's had a good week. Welcome back. Going to be doing another trade review today. So this is going to be a trade I took yesterday on Friday. I was away on holiday up until Wednesday of this week just gone. So I was only back to trade on Thursday and Friday. So I only took 2 trades this week. But the one I took yesterday, I'm really excited to do a review on this because I'm pretty sure it's the most textbook example of my setup that I've had the opportunity to do a review with. So let's get into it. I'm going to try and keep it short again. So I'm going to start on dollar this time, and then we'll go over to gold, which is what I took the trade on. But yeah, so starting on dollar. So let's zoom out a little bit. So this week started here. We have high time frame sell side liquidity here, which you can see we have touched twice and have moved away from. So since we moved away from that, this buy side liquidity has been my target because they're framing this as retail support, and so any buy side that's taken after we react off this level is going to have a lot of people buying it because they believe that this is a support and they think it's going to go higher from here. So pretty much all this week I was targeting this level of buy side liquidity. So if we zoom down into the 50, actually just do the 5 minute. So I was looking at this, taking this trade fairly late in the day on Friday compared to when I usually look. But so dollar had moved higher, we'd taken this buy side. Not by much, but we'd engaged this buy side here. Now as you can see we have this pattern here of a high, sets in a swing low, and then moves higher to take the buy side. Now as I've explained multiple times on my reviews, this is what I like to look for. When we take, for example, buy side liquidity, the most recent swing low before taking that buy side is where the majority of people will have their stop losses. People that had entered long here will most likely have their stop losses below here, or anyone that was long for any of this bullishness will be looking to move their stops up to the most recent swing low. So there'll be a lot of stops below here. So we take the buy side, and then what do? We immediately come down and we take this low. So now, once we do this, I'm in a position of being neutral. So I'm not looking for bullishness or bearishness. I'm waiting for the market to tell me where it's going to go next. And so we reach down below this. We then, I'm expecting some level of retracement back up into this. I don't know if it's going to overlap it and go higher or move up in and continue lower. I don't know that. I'm just expecting some form of relief higher after this move lower, and that's what we get. We get a move up into the 5 minute fair value gap. There, bodies respect that beautifully. So once we get that move, this is when I can expect the market to tell me where it wants to go. So in this move up here, we have a fair value gap overlapping with an order block. So if price wants to go higher, I can expect it to come down. Doesn't have to touch this fair value gap, but it overlaps with the order block. So I can expect it to come down, touch this level, and then you'd want to see a break higher. So you'd want to see it then close above this fair value gap after touching this. That would tell me that we're moving higher. If it's going to go lower, it's not going to respect anything in here. because then this would have just been a retracement higher to come lower. So this won't be a valid order block and fair value gap. And that's precisely what we get. So this candle here, closing below the fair value gap and below, way below mean threshold of this order block. Yeah, which is here. You can see we close well beyond that and well beyond the fair value gap. That's a very strong sign that we are going to come lower. And because we overlapped this fair value gap, you can expect it to come back up in and use that to come lower. So what time did this candle close? This candle closed at 3:40. So from 3:40 onwards, I'm expecting bearishness. I'm expecting a retracement higher first, up into this, which as you can see we got perfectly, the body's closed perfectly inside that, but then I want to see a move lower. If we drop down into the 1 minute, so 3:40 is here, this candle here. So this candle here, I'm expecting form of retracement and then bearishness. Now, admittedly, I was expecting it to come down for this low, because so even though I'm expecting bearishness, that doesn't mean I'm expecting the rest of the day to be bearish. It just means I'm expecting it to be bearish until it reaches its next objective. Now, as I've said before, price has two objectives it seeks for. One of those is imbalances, the other one is liquidity. So whatever the next untouched objective is, that's what I'm expecting it to touch. Now you can see we have this 1 minute fair value gap here, which, like I said, admittedly I was expecting it to come for this liquidity, but we immediately came and touched this, then we got the retracement, but the body's closed within this, so that's telling us we're still okay for bearishness. It did come to take this low, so we did get some form of bearishness, which was enough to facilitate my trade, but it didn't get all the way down to here. But again, I've said this multiple times in my reviews, doesn't have to go all the way. It's just a draw that we're looking for price to move towards. And because I'm not trading the dollar, it's not important that it gets there. It's just important that it moves in that direction long enough to facilitate my trade, which is exactly what we got here. And so we started moving lower from the 3:49 candle until 3:53. So that's 4 minutes of bearish movement that coincided perfectly with my trade. So if we go over to gold, let's go out to the 15-minute time frame. So let's remove this, we don't need that. So between these two black lines is the Friday. This was the day I was trading. Now, as you can see, we've basically just been in a consolidation for a while. But to be honest, that's not really too important with the framework for this trade. So Friday, we had opened and moved higher. We'd failed to make a higher high. We'd taken sell side, offered relief, and we'd shown continuation lower. We'd taken sell side here, we'd offered relief, we'd shown continuation lower. So if we go down to the 5 minute, you can see in this move up here, there's lots of little swing lows, meaning there's lots of places for people to put stop losses if they were bullish here. So yeah, we're taking lots of these, and on the 1 minute, we come all the way down to take this one here. It's not really important specifically which ones we take, just the fact that we've taken a lot of these swing lows. So this was the time I was looking at taking a trade. Is when we'd had a move lower, we'd offered relief, we've set in a swing high, and we've come lower again to take sell side liquidity. And this is at 3:37 PM. So after we take this sell side, what do? We pair it with buy side. It's always what you want to see when you take liquidity. Well, not always, but most of the time. The exception to that is SMT divergences, but that's not relevant here. So we take sell side, price immediately comes higher. There's no swing highs in here. This is the only swing high, so that's what we come up for. We come up a little bit higher into this fair value gap, but pairing the liquidity is what we're looking to do here. So once we're on this candle here, we are in a state of being neutral because we've taken the sell side and we've paired it with buy side. So anyone that's sold below here, or below here, puts their stop here, that's kicked them out. So now what do? We wait for price to tell us where it's going next. So we want to see some form of retracement, but we don't know if that's going to be an overlapping retracement where we overlap all of the premium arrays in here. If that was the case, I would expect bearishness, and I'd zoom out and look for the next low. I'd probably be targeting this low. Or if you see a pullback into one of the discount arrays and you see it use that to support higher prices, that's telling you it's going to continue higher. And that's what we get. We get the latter. We come back down in to the first fair value gap. The higher the PD array, in this case, the better. If we were to overlap this and have to come a bit deeper, that would make bullishness a bit weaker. But the fact that it only came for the first PD array, first available PD array, overlapping with the breaker here, and it used that to continue higher, that's a good sign that it's quite strong for bullishness. So we pair liquidity, we come back down in to the first fair value gap, we leave half of it open, overlapping with the breaker, and then this candle here, closing above this, making this a bullish order block. That's precisely what we're looking for. That's the break of structure higher out of a discount array. So that's what tells us we're bullish. What are we bullish for? An untapped imbalance or level of liquidity. So we've already touched this imbalance, so we're not looking for this. The next two untouched PD arrays we have is this volume imbalance and this level of buy side liquidity, this swing high. So I don't think I had this labeled at the start, but we're aiming for this and ultimately this. So this is where our profit is set. And so we're looking for, so at this candle here, we are setting our entries. We're looking for, ideally, I'd want to see the open of the order block be where we come down for. I want to see that be the entry. And ICT says on many occasions the most powerful order blocks is when they have a fair value gap with them overlapping. So we're fairly confident that this is going to be a good entry. I had 3 entries for this. I entered 5 contracts when we touched the fair value gap because I didn't. Obviously, when you're bullish, you want to see it be in a rush, so you want to see it just barely touch these PD arrays and then go higher. So I didn't want to miss the entire entry by waiting for the order block. So I entered 5 contracts when we touched the fair value gap. I entered 20 contracts when we got down to the order block, and then I entered another 5 when we got down to mean threshold of the order block here. So there we go, these are my 3 entries. Fair value gap, open of the order block, mean threshold of the order block. And as you can see, that's perfect. We nailed the exact low. It's exactly what we came down to touch. And then we moved higher. So I then took off 5 contracts when we got above this high and into the order block. So I think I was in with 30 contracts, if I'm not mistaken. So I took 5 off above here. And then I moved my stop loss to break even once we'd closed on this candle, because I wanted to see this close above this down candle, because then my entry is safe below here. We shouldn't come back below there. And So yeah, we open, we trade down, almost get immediate rebalance, and then we run the buy side. And as you can see, I wanted to point this out, this level of buy side is the only thing we run for. Yeah, we don't come higher for this, we don't even make it to this volume imbalance, we run this level of buy side liquidity. Because one of the main criticisms I get in my TikToks and YouTube shorts is that my risk to reward isn't very high. The reason for that is because the way I view the market is it's telling me what its very next objective is. I've always struggled to view the market in terms of like far away profits, like profit levels. So some people would be looking to enter here, and they might be looking for these equal highs or these equal highs. And I was never able to find success with looking at those sorts of objectives. And I realised I don't need to make it that difficult. I don't need to try and find profit levels that are, 6, 7, 8, 10, 20 are away. If I know that it's telling me that its next objective is going to be bullish, why don't I just look for the very first objective? Because sometimes that's all it comes for. It only goes for one more objective and then that's it. But if that's all I'm aiming for, then I'm going to get that much more often. My win rate's going to be a hell of a lot higher if I'm only ever aiming for the first objective. Now, I don't ever aim for anything less than 1-to-1 risk to reward. I won't do that. But I typically don't aim for anything higher than 2-to-1. And to be honest, it's quite rare that I get 2-to-1. It's normally below 1.5 risk to reward. And so yeah, this one, my stop loss was below the order block. My profit was up here. So it was only a 1.2 risk to reward. But that's all we came for. We only came for this first objective. And do you know what? That's just how I like to trade. If you're someone that likes to aim for 10-to-1 risk to reward, good for you. Go for it. But this is what works for me. I get a pretty high win rate off doing this. And it's what I've found consistency with. And this is one of the most textbook examples of my model. Let's put the executions on. So I had one entry at the fair value gap, second entry at the order block, third entry at mean threshold. We're in the trade for a total of 3 minutes, and we run straight to my target. Don't get any higher than that. We don't touch a single higher PD array than this. And then that's it. It's bearish for the rest of the day. So, oh yes, the only thing I wanted to mention is the two candles we move higher on are the 359 and 350 candle, which is, 349 and 350 candle, which is these two bearish candles on dollar. So these two candles lower is all I needed to facilitate this movement higher. Because we enter on this candle and this candle, and then it's these next two that move higher. So these two candles lower on dollar is all I needed. I didn't need it to come all the way down here. Just needed these two. And so yeah, there we go. There is one of the most beautiful examples of my entry. Come down for sell side, pair the liquidity, show continuation higher, aim for the very first objective that we haven't touched yet, entry on the fair value gap and order block, 3 minutes later, $6,000 profit. Pays to keep it simple is what I've learned. The more the simpler your strategy and the simpler your objectives, the more success you'll have. That's what I've found. So I hope you enjoyed. Have a great week. Goodbye.